What's up, champions? Good morning. Warriors. All ready to get this market. Right. All right. A little late start here. Just got back in from a trip. Let's skip the intro. Got stuff to do. What's up? Good morning. Get in here. That's pretty up here. Check. HP. What is going on here? Hold on one second. What in the world? My monitors. Don't let it go anywhere. YouTube. Good stuff. All right. Well, it is what it is. The 856. 452 on Qs. 452. We always know that this is kind of like the start of the end of the predictable part of the day. So we like to grab some dips and tap it a second time if I can get that. 411. MHP. 37. All right. Looking good. What's up, chat? What's up? Good morning. Wedding hangover? Not really, but kind of. Morning, morning, fellow warriors over there in chat. Don't forget to go to YouTube, give it a like button, say hello. Go over there, give some love before we start our morning. Spy with the 1.5 monthly maps. I'm reading correctly. Rich, I'll show you guys some more monthly maps. The wedding is pretty good. It was a surprise wedding. My brother, they were having an engagement party at this kind of like jazz supper club up in Kansas. I didn't even think there was a place we drove up to. It was like this hidden place in the back of something. We walked up, there were statues of all the Rat Pack. It was kind of cool. Little dark, dingy supper club. Smelled like smoke. Lamps, little lamps on the tables. Got Frank Sinatra himself in a walkout and started singing. It's pretty cool. All of a sudden, they surprise everybody with them walking in and wedding clothes. No, I knew I was in on it. I mean, I knew it was a wedding. I know, but most people did. It was about 100 people they invited to this party. All right, let's get ready to get that liquidity map paper. Good morning. What's up, Scott? What's up, Brian? All right, let's see what we get. Positive DD. All right, good. We're about half gap support or gap fill support. Solid. Res greater than 0. Support here. Oh, I also have my tablet I fixed. That thing ready to go. If I actually draw, I'll have to deal with my crappy handwriting anymore. All right, so starting here, resilience greater than 0, supporting. I like the look. Bull zone bottom. God, you guys know the drill on this one. So easy. All right, so we're gonna wait. That bull zone tap, double tap it right back up to open since we're at DD band already. So today, no long out the door. Here, back to here. This is the scalp. This is the money scalp right here. That's it. I'm res greater than 0. I'm gonna start building at half gap. Happy you tuning in from Asheville, North Carolina, first time in a while. What's up, Ian? Good to see you back, bud. Yeah, the funny thing was we drove, and I don't usually drive when I go on trips. Like, unless it's close, like 4 hours or less, sometimes I'll drive. When you're in Texas, you get used to driving, to a bunch of the cities. So it's 4 hours in the airport, pretty much to fly an hour. Usually it's like an hour to get there, an hour to Uber across town, an hour total to get your car to and from, and so it's like, if it's 3 or 4 hours, driving's the same amount of time, costs a little bit less. Plus, road trips to Texas kind of chill. This time I had to make a pit stop in Dallas on the way out there. So I was like, whatever, I'll drive to Dallas and I'll drive to Wichita. And it was like 9 hours of driving total. Yesterday I took the whole, we just raw dogged it back home. All right, resiliences are negative, so we are pulling back. I don't know if I want to actually short this from here, but with negative resilience, it does look like it's about to be the downside here. Let's get futures up in here. Right, negative resilience. Like we're going to be filling the gap a little bit to the downside. like to really hit that short too hard. But negative resilience off a DD band. Looks like we are hitting back to bull zone. So here to bull zone on Qs. I think Qs is the trade today. They're both here. Bull zone, SPY, bull zone, same thing. Okay, so it's DD band resistance down. I don't hate that idea. That resilience gets positive. It's dead in the water. We'll see what it does. Negative S&P resilience. So SPY back. Res is less than 0, so we're going to likely fill the gap a little bit to the downside. So the ideal short is, the ideal long is from here back up. So this is going to pull back today. Likely. Very likely. Res is less than 0. You guys know the drill. And then long it back up off bull zone. DD ratio greater than half. So simple. The hardest part is how high does it go until that finally realizes. So that's the problem with trying to short. I always have trouble taking this short because it can go like pretty high before it turns around and comes back. You guys know the drill, right? Negative res. I'm gonna have a little bit of pullback today. A little sexiness on here. Let's pull up Qs. 88% of the time. Of the time we close out inside. About 8% of the time we close outside. So at best, it's like a V-shaped move. That's it at best. Negative numbers there. Negative numbers there. It's not a long entry from here. Baby, let's go. It's hard to short off because you don't have anything to short off of. That's the problem. That's what makes that part hard. That's the hard part. Even if I have a little bit of fun with this one. Now these numbers, if these go positive, it's a different story. Around the edge there. A little bit of fun. Let's just pop it with a -1. Something small. I don't normally short because it's really hard to gauge where to short from here. I don't like to take this trade. That's the one thing I tell you guys I don't do. Just pop it with something tiny. So I want to long it back up to there. So the opening and continuation move would be a rare move on this one. So let's see what it does. Like I said, there's a percentage probabilities of which where we end up for the day. I say it's really hard to short. That's why it's really hard to pick a place to short from. That's the hardest part. These numbers negative, we are likely to pull back. Hmm. 16 days without power was no fun, dude. I'm so glad to hear you're okay, brother. That's got to be like one hell of a week you had or 2 weeks you had to experience without power. Hurricanes on here, no joke either. Losing power is like the worst. Okay, negative resilience. We're gonna pull back. Come back from I spent a week in Wichita. My country accent comes back. Negative resilience. We're going to pull back. Back to bull zone. Bull zone of support. Good deal. Now, again, it's hard to short from here because it can go really far before it snaps back with these numbers negative. So these white numbers being negative right here is telltale. Remember, it's really hard to aim a short. It's like, that's why I'm just showing you it's likely not to go in my favor that easily. It's going to be like, it'll hurt before it doesn't hurt. So normally we teach people no trade from here. Don't really bet against the stronger bull market. This is a small, very small scalp, nothing big, right? Nothing big at all. So much as the S&P. Problem is that the S&P does have the ability to finish that move there. and then it's usually, so that's the problem. So you have about an 8% chance that you close above, 88% chance you close within. Nasdaq is looking solid here, at least for, now again, when these numbers are negative, it's not like it just tanks. The stocks themselves are trying to sell. And so what you end up happening, what ends up happening, and it's kind of bad, is that it usually just, and then by the end of the day, and support's right there. So these are the setups here. Now the problem is on the outside of a DD band. We always tell people we don't know how far it can go before it finally like realizes that move. That is the problem. The better trade is to wait for the long setup off of 494. Like just sit back, let it do its thing, let it trickle up. So we do, here at Rock Series, we draw a pathway for the stock. We have all the evidence in front of us that's going to pull back today. I know the drill, but I don't normally short from here. Yes, the upper DD band is kind of what you look for, yeah. Negative resilience likely to fill the gap. And the problem is that even on Nasdaq, gap fill does go through here, so it's going to likely fight through this. So this is good. It's hard, like I said, outside of DD band, it's really hard to short from. Ooh. My little drunk from the wedding. I say a little drunk. I'm a lot drunk, but I had a day to sober up. We drove home, but I'll tell you, dude, they pour a heavy drink at this bar. We had my brother. This is the baseball player, the one I tell you about all the time. He used to play for the Giants. He's retired from baseball now, and living his best life. I'm like, my mom's like always saying, like, I got two boys. I got city boy and country boy. My little brother is a lot like, we're very, very much alike. He had an open bar. It was wine, beer, and old fashions. I'll tell you, in that tumbler glass, it was like whiskey up to here, and then the rest of the stuff. Every drink was like a triple shot. What's up, YouTube? Good morning, good morning, good morning. Let's kick your ass. Oh, dude, they were tough. It was good. It was a good time though. It was definitely a good time. Only my mom, my dad, my brother, or sorry, my mom, my dad, and me was alerted by my brother and his wife's family as well. Like all the friends, there was like 100 people showed up. Didn't know it was a wedding. Had some of their friends show up. They're playing a band. It was cool. Surprise wedding. It's kind of nice. They're super low key. My brother is, so he was like, they love doing low key stuff like that. It wasn't like this elaborate, over the top. And they're just like, let's just elope and just invite our friends over and surprise them. It was very fun, very cool. I had a blast. It's really hard to short from here because the market's still bullish, but negative resilience is a sign that market does want to attempt to fill the gap before anything else. All of these lights are green, which is good for that resilience being a leading indicator. But the problem is where do you short from is the hardest decision of the decisions to make. It's really hard to decide. So those of you here on YouTube, by the way, we have a Zoom call that's not delayed. We have 6,000 member community. We're one of the largest future trading communities there is. We developed this trading platform here. We have liquidity maps. Just lets me draw my trade plan on the chart. And all the stuff I do here, we train you how to do that. The Zoom call is where pretty much everybody is right now, and all the chat is there. So feel free to check it out if you guys are interested to learn a little bit more. Ever it's our Discord, or you can go to rockseer.com, find some more information on what it is we created here. We have a 1-month trial of our stuff. Like I said, this is the hardest. It's hard to choose. You don't choose to long from here. Remember, we have the rule. There's an 8% chance we close above the DD band. There's an 88% chance we close below. That's the rule here. So that is about right there, bisecting those two candles. So let me kind of mark it here. Let me just draw right about here. Oops. Now, again, we don't bet that because there's an 8% chance that we don't short because of that. The only decision to take any kind of short period (100%) is fueled by the resilience numbers to fill the gap. This is my QQQ liquidity map, baby. Oh wait, I'm off the chart here. So it's really hard to short from here. We don't normally... The question is, how high does it go? It does decide to do anything else. This is just an eval right here. This isn't a funded account. I just popped it with an eval. Now again, the question I always have a question mark is because like how high can it go? Or it realizes what it wants to do. So it's like trickle, 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 realize, and then pop. So the ideal, today's a really good setup because it's like, okay, well, let me just put a small position on it. Eventually, it will come down. Statistically, right? These numbers are negative. So it wants to fill its gap. It does not want to maintain the gap up. It's likely to fade, but it's not likely to sell off hard for the day. You know, bull zone is always a log back up the top. So today's setup, just like I draw for the morning. Two really good solid plays. The problem with the short is that you don't have anything to short off of. The S&P could really very quickly go to tap its little band the same way. How to read UVXY in today's context? Let's go. It's solid. It's like not bearish, not bullish. Give me right on the edge here. Like ETF is having another sale, 85% off, which is good. You're in between. Liquidity pocket just kind of means you're balanced, but you do have support and resistance inside of here. This tends to be more bullish than anything on VIX because MHP is always reversal pivot. So any upside move here is likely to be catalyzed in a reversal state. Because VIX is likely to bounce right there. Like right now, literally like right now. That's the spot. So with VIX likely to bounce, this is likely where we'll see any kind of reversal if there is one. Like I said, this is just a... Yeah, close that out. It's that the way that the hard part about this is that you don't know where it likely where it retreats from. But this one pop final squeeze is probably it. Like I like to get this one, pull back, and then get the bounce. I can find it. Yeah, so like on the upside, the breaks, we consider them irrational, right? So speaking of, Normally the rule that we teach is you don't really take trades up in here. So once you break through the band, you kind of understand that how high can it go? You don't know. So you don't engage heavily in trades up here. So normally what we do is, this is normally sit out day. But as soon as S&P hits its band, which is the last little spot, that's probably how high it likely goes. That is the end. So that is the rule there. So beyond these bands, we usually don't take trades. That's the thing. No, there is no trade. Bearing bull, there's no trade. That's the thing. That's like lesson number 3. There's no trade outside the DD bands. Once you're out, you're out. It's like the thing that we teach. The only reason I popped a short was just to demonstrate something on the stream. But the answer is no trade. We never short a bull market, right? Never do anything. I just popped it on an eval. Something small. Didn't waste anything. No real money loss. Nothing. You hear in Zoom, I mean, whatever you guys do, outside of the bands, it's usually a sit out day. That's why I just popped it with like a 1 contract. So you don't really do anything. The probability is very low that a bull market reverses. That's the way that you look at it. So the thing is while it wants to pull back, there's a question mark here because you don't know how high it's going to go. You don't know. That's the thing. It usually gets a little wonky before it decides to do anything. So I always have a question mark here. This is like, you don't know how high it can still go. There is no good long setup because the idea that it does likely want to pull back now. This is the stocks are starting to recover. The idea that it wants to pull back keeps me from longing. The problem, you don't know how high it's going to go. So you don't have a good profit target. You don't have a good R&R plan on this. So outside of DD band, especially when you wake up like right on the edge like this, it's just not a trade. Like this could be the moment that it just, you don't know. Yeah, DD breaks irrational. The upside, that the end, there's never a trade here. No trade. No trade up here. Ever. Ever, ever, ever. Ever, ever. This is like, if you haven't taken the new classes, you guys, there is no trade setup up here. Never. Like no official setup, right? So this right here and this right here are the culprits that are keeping me nervous about the setup of what we have here today. A lot of people here do short a DD band. That's the thing we tell you. Like when you tap it, a lot of people here will short off of that for that reason. So when I talk about the S&P is likely to fulfill its destiny there, the S&P is actually where the stats are, not Nasdaq. So the 8% chance. The other 4% is down here. I'm sorry. Second. I get those numbers. Do this for y'all. It's 12% outside the band, but it's 4% on the upside, 8% on the downside. Put this backwards, actually, I think. Back here. Let me pull up the information for you guys. Yeah, sorry, it's 4% on the upside. So say 8%. It's 4% here, 8% here. So it's 12% on the outside total. Yeah. So people can short off of DD band. Yeah. The problem is with resilience. All resilience is telling you is that ultimately, by fate, it's likely to pull back, right? It's ultimately to snap back unless the stocks get better, and the stocks aren't getting better. The S&P just fulfilled its destiny before that's likely to happen. So this is probably where the short entry comes from. And I had a terrible setup from here. So it's a looking for at least gap fill, which is a pretty sizable move to about right here. If this is the S&P by proxy, where we're going to go to. So no trade on the upside. Typically, we never have a trade. Now, some people do take small longs out here. I don't. I usually don't do that. I don't usually trade outside of the band. When Nasdaq's outside of the band, S&P still hasn't. So the S&P is usually my guide. So this is where the short setup takes place. I got in a little early trying to do the one on Nasdaq. This is likely it. So right here, it goes to roughly here if it does pull back. A lot of folks here do take the trade off of the band. They just don't trade outside of the band. So the problem is you have no idea how high it can go before it does pull back. And these are a little harder. So, yeah, 40 points is the stop loss on QQQ on Nasdaq futures. Market doesn't want to sell off. It likely wants to do, even if it does pull back hard, it still maintains a path like that if it does anything at all. It does not want to reverse. This is a bull market. The market's really strong. It's likely to stay there. Risk interval for S&P is 30, about 40, I think now. Yeah, so normally, this is where we just kind of say the day is over. The market doesn't like to sell off in these kind of states. It's just, it can have that surprise pull. Oops, and I always draw a question mark there because you don't know how high it can go before it does decide it wants to do that. So. But I usually don't put a lot of risk on the table to try to buy any kind of reversal. My brain is like, I wish we can dip so I can buy the dip. This is where I'm sitting here all day just thinking, buy the dip, bull zone bottom. Yeah, it's because you don't know, you don't have a good entry point for a short. It's better just to watch and snipe a good setup if you find one. Not really any good setup from here. Some people do like to bet on that 88% chance that it does close inside of here. But because the percent is not rejection off of this, it's that closes inside of here. It means you don't know how high it's going to go before it tucks back in. And so you have to be very careful on this particular setup. That number is the S&P's percentage. So we basically utilize that as our main guide for that probability. Nasdaq is just as rare-ish on the same tone. We haven't counted the Nasdaq numbers, but looking at it, it's very similar. They're not much different. So it's not a percent of a chance that we reject. It's a percent of times it closes on the inside. So it's like I draw it like this, like it can just trickle up, trickle up, trickle up, trickle up, trickle up. And then by the end of the day, it's like it's somewhere down in here. So Some people just put like, some people don't do anything. Usually I don't do anything. Some people will take a short with an R&R on it. Like basically they'll put 1 strike distance on QQQ and bet that it comes down. The R&R is pretty decent to fill the gap. If these numbers stay negative. And the Nasdaq is the one that's trying to push higher. So we're getting a little bit of love from the tech side of things. The S&P is typically the guide for the day. Yeah. As you hope for on days like this is that the market just sort of like traps a bunch of bulls, squeezes a bunch of them out, and then you're armed and ready to grab that dip on that bull zone bottom. And that's kind of what we're going to wait for here today. Do anything else? The ideal setup is always to catch the support from here. So you utilize the idea that there's a possibility of a sell-off, and this is outside of that rational band, and then this could just upside down. It does something like that. It's quick. We just wait for it. Watch. I'm right. Just watch. Just watch. Just watch. Just watch. Problem is you just don't know how high it's likely to go. It snaps back. The reason I don't grab a long on this one is because whenever you move this far pre-market, it's usually not much of a trade setup when you start your day off. So when the market opens here, there's not much else you can do from here. So. It's just like, and then it goes to some questionable area, and then it just hits pretty hard. And then that's it. And it'll be like maybe like 30 minutes, 20 minutes of selling. How high? You never know. And it's going to hit some kind of support. I think the Nasdaq one was here. Like that today. And it usually is going to stay along this path here. EDBM breaks are always the hardest setups to play with. Like I said, I've been explaining it all morning, is that it just like trickles up, trickles up, trickles up. And eventually wants to realize what this is now. Now, the idea that these guys are greater than 0 now means the index got squeezed a little faster than the stocks. And that the negative warning sign here has gone away now. So this is likely lowering the probability that happens, but it's still possible. Because that higher probability, it's still bullish. Like there's no big sell-off or anything. Like the market is still, like over time, still trying to do that. It's because like how high can it go? That is the problem. There's no resistance to short off of. It's just like as soon as those shorts finish getting exhausted, then it attempts to the stocks and the index tend to like collapse back into each other. Okay, what do I got here? This is our flashcard that we give, so all of our members get this. This is from the new. If you guys haven't taken any of the new classes, you have to take all the new classes. All the old ones are now obsolete, fully obsolete. You need to take the new classes that we teach. So when the DD ratio is greater than half, you don't short on that. It's a sit out, 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 because it can keep going. You don't know how high, and it's a bad trade. People still take it, but this is the rule. Okay, when DD is less than half, hit it with a really hard short on that one. DD is greater than half, you float off the bottom. Less than half, you always buy lower DD band, always, 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 because there's only you always buy bull supports as much as you can. Short, I need a really confident move, so I need the confluence there to short. And DD is greater than half, you don't short off the band. And a lot of people will long on the break with a small position, with a stop one strike below 10 points in the S&P kind of thing. So all of our new cheat sheets now have specific rules on them. If you guys haven't seen them, you have to take the new classes. If you don't know where the new classes are, send me a message. We're going to get you guys all access to the new stuff. So we've thrown out all of our old courses to revamp them, to have statistics and probability to go with it. Okay. Probably call this trading day sooner rather than later. I got a 10 o'clock meeting I got to go to. Another thing is you just wait. I know it's not the most fun setup. A lot of people here will take a small long on the break. I don't personally take it. People take small longs on the bounce right there. I don't, unless I have perfect confluence. Sometimes I'll have the feeling I want to do it, but we haven't had perfect confluence. The market definitely didn't open with the stocks being as strong as they were. As I drew and see if I'm going to be right today, you guys this is why you're here. I tend to be right about these things, but we'll see. This is the pivot point to go long small if there is a long small. I think the move is exhausted. I think that the proper long is from a dip today, so there's no long chase from here. Let's see if it does realize, and I draw. Then you'll see that I drew this like right when the market opened. I'm like, how high? Question, and then it eventually will snap back. See if I'm right. Bang Bull, you measure the DD band from the previous day's futures close. So wherever that is. So you would go 40 points off of here. The 58.93.25. No, look at the close right here. Here. So close. 58.53 and a quarter. What's 40? Where are you measuring from? So the futures closes here. Make sure you're using the right reference point. Were you getting 50? Where are you getting 58.60 from? Check your reference point. You got it. Don't use equities close. I think that's probably what you did. Use the futures close. Oh yeah. That's what you did, bro. You did this. Yeah. So you're okay. Yeah. That's I'm just kind of reverse engineering what you did. Yeah, you did this. It's actually where the futures Globex closes. So it's the 5 p.m. Don't use the equities close. Yeah. Whenever you're in doubt, just come here. The DD band numbers will be here if they're not printed on your screen. So this is that quote unquote small long, as we talk about. How high does it go? You never know. Yogurt says for SPX, the daily options applied move. I think your swim shows the options. Was about 40 points after previous day's close, up from today's open. Implied moves are always based on the previous day's close. Previous day's close. Good question. Yeah, I did definitely drink my weight in whiskey and country dance and dance in general. It was a fun surprise wedding. Can we go back to here? So the problem is with these kind of trades, what normally we teach people to do is you sit out, period, unless you just want to plant a short at DD band and possibly get squeezed on your full stop if the R&R is actually there, then that's totally okay. So the question is, how high do we go before it tries to fill the gap? As the resiliences are negative, it doesn't mean that it just immediately starts to. The problem with the index deviating from the stocks are selling off while the index is going higher. That's what resilience is telling you. That's the warning sign today. These numbers right here are negative. That's the warning sign that the long move is likely exhausted. So be careful, because while they are deviating, the index is getting squeezed, the stocks are selling, the stocks can just immediately squeeze too to follow up. So usually can imply that the index will move first, and the stocks will move first, the index will follow, which is kind of what the statistics are. That's what I'm looking at now, which is why I think like eventually the index will return to meet the stocks, because the stocks are picking up no momentum right now. The bet is hard to take because you don't know how high or how far the index is getting squeezed before it realizes. There's some firm in a margin call or something, they're going to just be buying and getting out of the way as fast as they can. We take the probability that there's an 88% chance you close inside the bands to know that, but there's nowhere to short off of, and I have a rule that when I short off of something. The S&P DD band, that is where the short off of does take place. But again, it's a hard short to take because it can overshoot, and the overshoot degree, I always say how high, because you know how high it'll go. Market's a little irrational and crazy right now. So what a lot of people do is they take the 88%. A lot of traders actually that I know from here, they do this. They'll just plant a contract, that's it, and just leave it there all day. They don't care if the market runs up hundreds of points against them, because 9 out of 10 times it doesn't. So they play in the longer term game. It's just like you just take the bet that it closes underneath, and you just plant it. And if you have like a large account and you just do that with one contract, you're only up and down a couple of percent. Not a big deal on the worst possible days. If you keep your position small enough, a lot of people just put the short there and walk away, knowing that more often than not, it will close or retrace or pull back inside of the band. And then you have those big blow up days. And of course, that only applies if there's not an event or like a catalyst. Today, there's not one. No catalyst today. So essentially, a lot of people I know just put a contract on and sit on it. Take whatever drawdown it takes, and then when it snaps back in, they're in the money. Or what they'll do is they'll buy puts. They'll buy 0-day puts. which is another good strategy to bet that it comes back inside the band. So like today, QQQ popped really high. That's starting point right here, so 496. So like basically, somewhere like wherever S&P touches the DD band or whatever, you would bet that something pulls back in. So by proxy, the S&P hits a resistance and is now starting to pull back. Or is that how high does it go? The S&P hits its resistance right here, and then some people will buy whatever stretch the farthest put. So like, let's bet that QQQ comes right back at 496 today. To at least go back inside the band. Do you see how like the market's just like trickle up, then eventually it just like wants to just pull back in? I'm doing this long enough. Yeah, or play with evals. That's what I did. Popped an eval short. I didn't even do much on it. Let's hear it in the chat. Was I right? Am I right? Don't chase that long. Don't be an idiot. How'd I do? Was I right about the whole thing? It's really hard to short from because you got to pick a random spot. You don't know where to short from. But you don't take the long either because this realizes sometimes, and then you just kind of don't do that. How'd I do? Did I do okay? Not terrible. Try to be very, you know, especially here, like the for YouTube, right? You try to help, you know, coach people through understanding how markets play sometimes. How high does it go before it realizes? Now, again, this is trajectory is up. Don't for a moment think that we're in any kind of bear market, even if it sells hard today. If it sells hard today, I'm aiming for my next long. This market's going up. Market's steadily bullish and bears are squeezing. Monthly map is showing me the future here. Bull side getting stronger, bear side getting weaker. It's bull market. We're gonna wait for this one to pull back. So nothing. I'm not taking any real risk today. So let's kind of keep an eye on the S&P because that's where the real resistance is right here. Those of you that haven't checked out, what's up, Rocket Scooter? Little video that shows about what it is we actually do. You're also the creators of the Marketplace. Marketplace for traders. Let's see if I was right today. Just hold your bridges. Some more information over here. We have a 1-month trial. You can check out our stuff, our platform, and our software and everything. Look, there it is. Called it. $67 to try it out. It's normally $200. So you guys in YouTube, feel free to come check it out. About 6,000 member community. We're the largest paid futures communities there is. Everyone here does trader funding programs, real traders, you name it. A lot of options traders here as well. How high does it go before it tries to realize what it wants to do? Well, there it is. S&P resilience is now recovering, so the stocks have started to catch up. I don't think we're going to sell super hard today. But with the S&P, how high does it go? The resistance now becomes around there if it does pull back. So it's even stronger now with those stocks being the way they are. No short setup either. So basically what happened this morning is the index got squeezed. And now the stocks are trying to catch up. So now this is likely where we end up. This being greater than 0, the little cheat sheet that we have gives you a little bit of information on that. Right, you guys over here in Zoom called it. Yep. The God, it said, you think you had moved 40 points already for the open, so a lot of folks have gotten squeezed and at open. They were closing the position that caused a short squeeze for a bit. Now we're coming down. Yogurt, you nailed it. You absolutely nailed it. That's exactly what happened. Imagine that you had puts or something, right? Or you had some kind of short position, and then the market moved beyond the expected range on SPX. And so what happens is you've hedged that expected range. And so when it goes beyond it, you tend to overreact. And so that typically propagates a further short squeeze. You nailed it. So I drew this. You guys rewind the stream. I mean, this is how good we are at this. Draw this. How high does it go? You never know. And then it just ultimately snaps back down somewhere. How high does it go? Now, again, it's hard to trade it. It's easy to see it, but it's hard to trade it. That's why all of our teaching says outside of these bands, just don't mess with the market. Don't even try. Like, let the market do stupid stuff because you don't have good pivots to trade on or off of, and a lot of times you're just going to be kind of betting on something. The market wants to be bullish. Let's not be any counter to that. The market wants to be bullish. As a matter of fact, this has been the strongest bull market you've probably ever seen in your life, and it started last month. This is the start of the strongest bull market you've seen in your life. The election might cause a little instability, but between now and the end of the year, oh baby, we're going up. We're going straight up. I mean, straight up, and probably accelerating on the way up too. And like, circumstances can change, but there's nothing bad in the pipeline. Nothing bad. Every piece of news coming out, number one, is going to be good. Number two is predictably going to be good. Market can't price in anything bad. There's nothing to even price in. Strong bull market. As long as the bull side bottoms are slipping down, strong, baby. I'm excited about it. This particular day is not super tradable, but still. Bear side squeezing as the bear side top is sloping down like that. Also, bears are getting out. This market from here is this, guys. We're talking 550 Qs. Talking over 600 SPY. I mean, it's going there. It's going straight there without even stopping. There's nothing other than the election that can even appear as a catalyst. There's nothing that's predictably, unless there's something unpredictable that some global catastrophe or something, another COVID or another whatever, on the map, on the forecast of what's coming out. Everything is predictably good. The Fed's cutting rates, inflation's coming down, employment's getting better. I mean, it's like GDP's going up. Every sign, every piece of the economy looks good, or doesn't look bad. That's the one thing. It doesn't look bad. And it's not like bad enough to start trending down, and it's not good enough for a bubble to pop. Like, it's like we're in that sweet spot where it's just the start of it. And this is where you kind of have to like understand as a trader is that when markets are rallying, this is a good piece of information. Markets are rallying. You tend to be like, okay, we're in a bubble, right? Okay, it's got to come down. Housing crisis, right? Oh, shit's bad. Mortgage bonds are worthless. This is going to crash. It's going to crash. Yeah, it'll crash. 2 years later. And then went up. Yeah, I mean, you're right, fundamentally. Bad news takes so long for the market to give up. Everybody has to kind of be no longer buying the market. With good news on the horizon, the market's going to try to sell the whole way up. And it's just going to be shorts are getting squeezed because there's no accumulation of like mountains of traders trying to sell off. And so when you're betting on the market reversing, you're not betting on people betting against the market or people shorting the market, because that never brings the market down. You're betting on longs liquidating. And as long as the market looks good, longs just hold on. And as long as that's happening, the market just does not like to come down. And predictably so, there's nothing in the news that I see that can even shake this market out of its throne. So right now, Nasdaq has still got that negative resilience. The S&P is slightly positive. The S&P is finding a bit of steam to not sell off because the stocks themselves are rallying. The S&P is trying to hold right here. No hold. See, how high, how low, you don't know. It's kind of random. The S&P is now breaking up. SPY's not going to highs for the session. Interesting to see that. We have a rule is that whenever you move that far pre-market, you just don't trade. Don't usually trade those. Let it do its thing. You do your thing. Yeah, see, you don't know how high it wants to go before it tries to sell, and it'll likely end up where it needs to go. But there's still a massive amount of short squeezing going on here. Market's clean itself up a little bit. Yeah, it doesn't. Whenever you get that kind of selling pressure that immediately starts to squeeze, it doesn't look like it actually has any kind of downside momentum. So this is the harder part of these kind of setups. Is that while there is that chance for it to want to retrace a little bit, while the S&P, the stocks themselves have started to support. Now the support has moved. This is how high thing that I drew. I keep moving the chart so it shows you where the support is. About here now. So we're now supporting the open price. When this is greater than 0 now, the stocks themselves have caught up. Wherever happens, it supports the open price. So if you like sit out for the day and you come back and like later at the end of the day, this is down here and that's greater than 0, I always pop along. And I always pop along on bull zone. So what my favorite thing to do is just wait for this and not put a lot of risk on the table. There's about a 4% chance we close outside of the band. but it's not like it rejects the band outright. So that's what makes this kind of set apart. And then you'll just be floating along here that have this like green candle pops out of nowhere. So be careful doing anything up here. Yeah. So what sucks is that when you like kind of start the day off and most of the move has already happened, it's like, on that note, you guys, I'll probably call it a day. Don't forget, we start our new 20 days. Yeah. Nothing to do here. We start our 20 days all over again. We redo all the courses. You guys will learn how all of this stuff works. I promise you will have a fantastic time going through all of our new course material. I'm not going to lie. Y'all have a great time, and I urge you all to do it. We have revamped everything. We've taken old liquidity maps. We've removed anything that wasn't high probability after years of back tests. Now we have all the data coming through. We focus only on the highest probability setups. We have odds for everything. Probability this happens, probability that happens. We have a betting strategy that goes with it. It is a complete overhaul. If you did not go through this stuff, you need to go through it. Everything you've learned here prior Rocket Scooter, consider it obsolete. We have a whole simplified strategy and approach going forward that you will love. We had all the options that we had in front of us of possibilities. We've narrowed it down to like the best handful. Just focus on that. 3 p.m. 3 p.m. Eastern, 2 p.m. Central.